everyone, welcome back to my channel Accounts by Amrita. Hope you all are doing well. In today's video, we will be calculating and preparing a profit and loss statement using the cash book, stock book and purchase and sales journals. Under the periodic inventory, cost of goods sold is equal to value of inventory at the beginning of the period plus inventory purchased and received during the period minus value of inventory at the end of the period. And net purchases is equal to purchases minus purchase return. We would be making a statement of trading. It is a part of the income statement. First step is to calculate the cost of goods sold. There are certain expenses which are related to cost of goods sold, like import duty, which is a tax on imported goods, and freight inwards, which is shipping and handling cost incurred by a business that is receiving goods from the supplier. Last element of statement of trading is gross profit. Gross profit is equal to net sales minus cost of goods sold, and net sales is equal to sales minus sales return. Then comes the income statement into the picture. Profit for the year is calculated in this statement. Net profit is equal to gross profit minus expenses. Alright, that's it for learning. And now we are going to do some exercise questions on this topic so that you would get some clarity on the concept. So stay tuned for that and let's begin the exercise questions. Alright guys, let's do question number 1 of activity 4A, page 49. A business began the year with inventory of 22,000 and made purchases of 58,000 during the year. At the end of the year, inventory is 26,000 and net sales for the year is 92,000. Calculate the gross profit. So it's a two-step process. First, we need to calculate the cost of goods sold and then we can calculate the gross profit. So cost of goods sold is opening inventory plus net purchases minus closing inventory. So they are given opening inventory is 22,000, purchases is 58,000 and closing inventory is 26,000. So that cost of goods sold would be 54,000, which is 22,000 plus 58,000 minus 26,000. And then the gross profit would be net sales minus cost of goods sold. Net sales they are given 92,000 and cost of goods sold we calculated as 54,000. So 92,000 minus 54,000 gives us 38,000. That's the gross profit. So alright, let's do question activity 4B, question 1. Opening inventory 2,000, sales 96,000, freight in 7,000, purchases 36,000, closing inventory 4,000, freight out 2,000. So we have to calculate the value of cost of goods sold and then gross profit. So cost of goods sold is opening inventory plus net purchases minus closing inventory. Here opening inventory is 2,000 and closing inventory is 4,000. Purchases is 36,000, but we have one freight inwards as well, which is 7,000. So we need to add that to the purchases amount because it's a cost related to cost of goods sold as discussed earlier when I was explaining everything. So that gives us the cost of goods sold to be 41,000. Then gross profit is net sales minus cost of goods sold. Net sales is 96,000. Now freight outwards is an expense which comes in the income statement, not the trading statement. It comes after gross profit is calculated to calculate the net profit. So we have to do nothing for freight out 2,000. And gross profit would be 96,000 minus 41,000, which is 55,000. Now let's do, alright, so let's read question activity 1 of activity 4C. Asi Moria is in business as the owner of Secondhand Clothes. He has no accounting knowledge at all and asks you to sort out the following totals for the accounting period 1st April 12 to 31st March 13. He needs to know what his profit is before submitting his tax return. Sales 25,000, purchases 15,000, wages 1,000, rent 400, advertising 100, opening inventory 10,000, closing inventory 12,000. Please give Mr. Moria the results in a fully classified income statement. So we have to prepare an income statement, and we need to put proper heading for it. Secondhand Clothes income statement for the year as at 31st March 2013. Then revenue, particulars, 2 columns for amount, particulars, and 2 columns for amount. So revenue, basically first heading is revenue, and then sales 25,000 less cost of goods sold, which is opening plus purchases minus closing, 10,000 plus 15,000 minus 12,000, which comes out to be 13,000, and gross profit is sales minus cost of goods sold, which is 25,000 minus 13,000, which is 12,000. Then expenses. Now we have 2 kinds of expenses, distribution cost and administration cost. In distribution cost comes the wages and advertising, 1,000 wages and advertising 100, and then administration cost 400, which is rent. So 1,500 expenses, 12,000 gross profit minus 1,500 expenses is 10,500, which is net profit. So that's how you prepare an income statement. And I think you can do question number 2 yourself, as this is similar kind of a thing, similar kind of question that we just did now, question 1. So I think you should be doing question 2, 3, 4, 5 of activity 4C, and activity 4D is your homework. So if you have any problem, you can come and ask me, put a comment on below the video so I can explain it to you. So thank you guys for watching this video. Wait for the next video. Don't forget to like, share and subscribe. Till then, bye bye.